The Student Investment Fund is a course we teach here at Anderson among a number of investment management courses, but this one is created by ideas from donors who wanted us to replicate as best we could in the classroom the actual investment management process. Students compete to be enrolled in this 10-person class, which manages not quite $2 million of money in the UCLA Foundation for 18 months. During that time, they make decisions about what the economy is going to be and their economic outlook for the next 12 months, what the asset allocation should be for those funds between stocks, bonds, and cash. Then they review usually about 150 companies to decide whether the securities of those companies should be included in the investments in the fund. And then they actually manage the money for 12 months, both debt, equity, and cash. The equity portion is divided between growth style and the value style. Finally, in the last 6 months, they actually compete with their own equity portfolios with one another, although we never disclose who the individual students are that either perform well or perform less well. And finally, during the 18-month period, they visit 30 investment management companies located primarily in California. And those companies are invited in the last month of the year before they graduate in June to a dinner where the students, the 10 students who have managed the money, actually discuss their performance and present an annual report that is part of their experience in managing the fund. Great story about the Student Investment Fund is not only the educational experience that it's created, because we now have about 150 graduates who have gone through the program in the last 20 years, but more particularly that after the fund had grown from the original $650,000 that was contributed by donors in the early years to now almost $2 million, we have taken 5% a year to create fellowships inside the Anderson School of $5,000 each for student aid. And at one time, the fund was the largest single source of student aid in the school, no longer because other donors have come in. But the add-on behind the aid the fund itself creates is that graduates have now started donating themselves fellowships back to the school for the benefit of existing students, current students, but in reflection of the learning experience they got in the Student Investment Fund. And so we have one fund that now has been created by a former student alum, which generates 5 more $5,000 fellowships a year for students in the Anderson School, and we have 2 more in process, each for $5,000 fellowships each. And our goal is, frankly, to have the fund's graduates creating more fellowships for Anderson students as a result of their experience in the SIF than the fund itself creates. And we think that's a great use of an educational experience and experiment to first take donors who wanted students to manage money and get experience, to have that money grow to the size that it could create that experience, then to have it create fellowships, and finally to have graduates who had been enrolled in the course to generate actually more fellowships for the school than the fund itself.